Welcome back to the Keiser Report. I'm Max Keiser. Time now to go to New York City. Talk with Jim Rickards of Tangent Capital. Jim is the author of Currency Wars. You can follow him on Twitter. His Twitter handle is James G. Rickards. Jim, welcome back to the Keiser Report.
Thank you, Max. Thanks for having me.
All right, Jim Rickards, as the global financial crisis gathers pace, nations and regions around the world are engaged in radical economic and monetary policy. Is it Europe that you say is doing everything right and that U.S. and China are doing everything wrong? Explain.
Yeah, I've been a little bit of a minority of one on that, Max, but the fact is, I like to say plan beats no plan. Europe is kind of very exasperating to the rest of the world because they're doing this slowly and methodically, but they are moving in the right direction. They're working towards a fiscal union. They're working towards common bank regulation. They're working towards common bank insurance. They're not all the way there yet, that's obvious. But the fact is they're moving in the right direction. A lot of people say, oh, Germany will never underwrite the periphery. Well, I have news. Germany is already underwritten the periphery. They're just trying to get something for their money. And they're basically imposing a German economic model on the rest of Europe. You'll see Russia and China investing in Europe. In fact, Russia is already very active in buying up Greek energy assets. So you'll see youth labor. Again, the 50-year-old probably doesn't want to take a pay cut, but the 25-year-old will take a job. So some combination of German technology, Russian and Chinese capital, youth labor could actually turn the periphery into something like Singapore on the Mediterranean. So I'm very bullish on Europe and the euro. China is coming in for hard landing, not right away. I actually think Chinese growth in the second half will surprise to the upside, but China can make their growth whatever they want just by infrastructure. The problem is they're building buildings that no one's going to occupy. They're building highways that no one's going to drive on. They're making steel that no one needs. They're just running the economy full throttle, but a lot of this is wasted. And those chickens will come home to roost probably in 2014, and the U.S. is driving off a fiscal cliff. So I'm much more bullish on Europe than I am on U.S. or China.
Deborah! Stop this thing! Stop it!
Granny!
Yes, Jim?
Granny, grab a hold of something and hang on. Cousin Pearl and that overgrown son of hers is headed right for the cabin in that old truck.
Heaven protect us! Did they hit us, kid?
No, but I think they sure want the chicken house.
I'm sure sorry about the chicken house, but nobody got hurt.
All right, so just to round out the score here, what about United Kingdom?
Well, the UK has sort of dealt themselves out of the game. Of course, they had an opportunity to join the euro. Even now, they could apply to join the European monetary system. I think the problem with the UK, frankly, is they have no gold. They have about 300 tons, but that's tiny relative to the size of their economy. That's just slightly more than Greece, and it's less. You know, you look at Germany has 3,000 tons. France and Italy have over 2,000 tons each. The European monetary system, the 17 members that back up the euro, have over 10,000 tons. So the problem is that right now people still have confidence in paper currencies, but because of the leveraging of central bank balance sheets, the deterioration of asset quality, the printing of money left and right, sooner or later that confidence will be lost, and then the world will have to, in effect, reboot the international monetary system. There are a couple ways to do that. It could be gold or it could be SDRs, but either way, the countries with the gold are going to have a large seat at the table, and the countries without the gold are just going to be tagged along. So, as I said, the UK, if there's a currency crisis somewhere in the world, I expect it will be in sterling before it's in euro.
Most spectacular treasure in history.
It was brought to the New World by Columbus and hidden by our founding fathers, never to be seen again.
You're treasure hunters, aren't you?
We're more like treasure protectors.
To this day, the clues they left are all around us.
All right, I want to get your comment on something. It was reported recently that Germany is talking to other countries in the Eurozone about underwriting their debt in exchange for some collateral, and that collateral being gold. So what is your thoughts on this report? It seems to play pretty much along your narrative that you outlined in your book, Currency Wars.
Well, right, and of course these countries that can get financing in various ways or can raise money, they're selling their hard assets. So they're selling ports and highways and airports and natural resources and other kind of hard assets and infrastructure. But gold is the ultimate hard asset, and sure, I think Greece has already pledged their gold. I'm very curious. Libya's not in Europe, of course, but I'm very curious about where the Libyan 100 tons went. If I had to guess, I'd say it's on a NATO army base somewhere, sort of being held in trust. Yeah, at the end of the day, Germany will take these gold pledges, and that just leaves them in a more consolidated position. Germany doesn't have to seize the gold, but if it's pledged to the ECB, and the ECB is under Germany's thumb, then in effect, Germany's going to have control over that gold. And as I say, nobody wants to talk about gold now. You won't find a central banker in the world with one good thing to say about gold, but it is the plan B. As long as people buy into paper money, they don't need to talk about gold. But once that confidence collapses, they'll be able to pull the gold out from the sidelines and say, look, we've got a new system backed by gold. The weaklings in that scenario are the UK and also China. By the way, Russia's been doing a good job of acquiring gold. They're kind of closing in on 1,000 tons. They'll be there in another year or so. 1,000 tons is a good quantity relative to the size of the Russian economy, and of course they have oil and natural gas. So they're in relatively good shape.
Well, of course, Russia watches the Keiser report, and we've been encouraging them to buy gold for a few years now, and they've been taking our advice. But talking about these central banks, and including the Bank of International Settlements, there's a move now, right, to make gold, to reclassify gold as a Tier 1 asset, which would then effectively monetize gold, allow these banks that are, with questionable collateral to have something of value. Can you talk on that?
Yeah, there's a little bit of confusion there, Max, between the categorization of assets on the one hand and Tier 1, Tier 2 capital on the other. They're not saying it's capital, but you're right. By qualifying it as a high-quality asset, the haircut on that is zero. In other words, you can hold gold on your balance sheet and not have to provide any capital against it, whereas if you hold certain kinds of mortgages, you might have to provide 50% capital. Certain kinds of loans, you might have to basically treat them as 100% weight for purposes of capital. The capital rules are kind of between 8 and 12%, but the question is, what's the weighting of the assets? And basically, they'll say gold will have no capital requirement associated with it, so it's the ideal asset. You can hold it with a minimal amount of capital. So it'll make it more attractive for banks to buy. It'll be an alternative to the dollar. It's not monetization per se, but right now, one of the reasons the dollar is so strong, people are incredulous. They say, the U.S. is driving the bus over the fiscal cliff. We're going to impose a 4% of GDP tax increase in January 1st. It'll completely ruin our economy. But why is the dollar so strong? Well, one of the reasons is there's nowhere else to go. There's no other alternative. Suddenly, but people are nervous about the euro for other reasons, because of the instability in the banking system, et cetera. There's nowhere else to go, and so people buy dollars. But if you give them gold and say it has zero weight for capital purposes, you can hold it without a big capital requirement. That'll make gold an alternative currency, and of course, that at the margin, that'll bid up the price of gold.
All right, Jim, let's move to London. Talk about the latest global financial fraud to emanate from London, of course. LIBOR. Do you think this is a victimless crime, as many contend? How big will this get?
Well, I don't think it's a victimless crime at all. By the way, I do think it's a crime. This is fraud. People should go to jail over it. So it is a crime. It is not a victimless crime. This is actually huge, Max. I think this could actually destabilize the global banking system, and let me explain why. There are a couple of myths that have been put out there, and a lot of happy talk coming from different sources about this. A lot of people say, well, there were winners and losers. When you manipulate LIBOR, some people paid more, some people paid less. When you net it out, it's not that big a deal. But that's not the way the legal system works. The way the legal system works, when the class action plaintiffs' lawyers come in, they're going to represent the people who lost on this. They're going to want to be paid gross. Okay, but the bank cannot go out. The people who made money on it because LIBOR went their way, maybe they were a mortgagor and their mortgage rate was less, well, they're not going to give the money back. You're not going to have mortgagors calling up J.P. Morgan saying, excuse me, can I give you a refund because, LIBOR was lower than it should have been. And the banks can't sue those parties because in the United States, at least, and actually in UK, we have what's called the in pari delicto defense, which means that if you're partly guilty, bad guys can't sue bad guys. In other words, J.P. Morgan trying to collect from the winning side of the trade would be like a bank robber suing the getaway driver, because he took a wrong turn. So in other words, this is not a net exposure. It's a gross exposure, number one. Number two, people have looked at the mortgages and said, well, you know, they lowered rates, so doesn't that mean that mortgagors paid less? Well, maybe, but that's not where the action is. There are $500 trillion worth of swaps in the world, derivatives, and every swap is a two-sided transaction. Now, maybe you pay me on the S&P 500, I pay you LIBOR. You pay me on Greek credit default, I pay you LIBOR. You pay me on 10-year notes, I pay you LIBOR. In other words, people focus on the bet, whether it's a 10-year note or a stock index, but they ignore the fact that the other side of every swap agreement in the world practically is LIBOR. So you take, even if it's 10 basis points, even if it's 5 basis points times $500 trillion times 5 years gets you into the tens of billions of dollars easily. And this is not going to be a hard case for plaintiffs' lawyers to prove, because we have the smoking gun emails coming out of Barclays, and I'm sure there's worse in the other banks. A lot of times when people sue in these class actions, the defendant will file a motion to dismiss, because they'll say, well, the allegations aren't really specific, they're kind of general, and you can't use a complaint to go on a fishing expedition. But here, plaintiffs can make very specific allegations because of the emails we've seen. That'll get you past a motion to dismiss. Once you do that, you're into discovery, and that's Pandora's box. You get 10,000 emails from J.P. Morgan, from the trading desk, talking about LIBOR. I guarantee it'll make your hair stand on end. The cases will go forward. The damages are horrendous. The plaintiffs will be able to prove their case. The smoking gun emails are there. And I actually think the U.S. Congress is going to have to intervene to put a lid on this, because otherwise you're talking about the son of TARP.
This is preposterous. I've never approved of anything like that. Our source was the New York Times. Dr. Strangelove, do we have anything like that in the works?
A moment, please, Mr. President.
Under the authority granted me as Director of Weapons Research and Development, I commissioned last year a study of this project by the Bland Corporation. Based on the findings of the report, my conclusion was that this idea was not a practical deterrent, for reasons which at this moment must be all too obvious.
Right. Well, it's a follow-up to what you were talking about last time you were on the show, in that the concept of value at risk, risk analysis, and taking a net exposure is incorrect. There's actually a gross exposure, as you're talking about, and this just underlines this fact that this whole derivatives market has to be taken as gross exposure, not net exposure, and fraud on the LIBOR is just opening up this Pandora's box, if you will. Well, now, talk about Timothy Geithner. When did he know? What did he know? When did he know it? How is he involved?
He knew with specificity in 2008 that LIBOR was being rigged, and he sent a memo or email communication of some kind to the Bank of England and said, hey, can't you clean this up, you know, kind of urging them to fix it up. Why didn't he call the FBI? It's a fraud. It's a crime. You don't send a memo, you know, it's like, oh, there's a serial killer on the loose, you know, could you please do something about that guy, you know, tell him to clean up his act. That's what Geithner did. You're supposed to call the FBI. You're supposed to start an investigation. This is criminal. There's no other way to describe it. Timothy Geithner is the biggest aider and abetter of criminal fraud. In the world. And this goes back, Ron Susskind had a very good book called Confidence Men. It's the economic history of the first couple of years of the Obama administration. And he reports that Geithner at the White House, you know, speaking to the White House staff, and by extension the Department of Justice, said, you have to go easy on these bankers because the system's too fragile. If we start taking people away in handcuffs, you're going to cause a banking panic. Well, maybe the system is fragile. I don't necessarily disagree with that. But what does that say? The Secretary of the Treasury is trying to cover up crimes or tell the Justice Department to go easy? And what signal does that send to the wrongdoers? It says, hey, you can break the law all you want. The government's not going to go after you because you're too big to fail. And so the too big to fail doctrine goes beyond finance. It goes into criminality, because the history in the United States, going back to E.F. Hutton, Drexel, and Salomon Brothers came to the brink, is that financial firms that get indicted fail. Therefore, if you're too big to fail, you can't be indicted, but that means you can break any law you want, and there's no enforcement. And as I say, Geithner is the aider and abetter of criminality because he won't enforce the law.
All right. way, we only have time for one more question, and it has to be a yes or no question. Given what we've seen in LIBOR, is it reasonable to think that we're seeing the same type of manipulation in gold and silver?
The short answer is yes, but you have to infer from the price action. I don't think we've seen that smoking gun yet, but we do know the BIS is involved.
Okay. Jim Rickards, we're out of time. Thanks so much for being on the Keiser Report.
Thank you, Max.
All right, and that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacey Herbert. I want to thank my guest, Jim Rickards, author of Currency Wars. If you want to send me an email, please do so at kaiserreport@rttv.ru. Till next time, Max Keiser saying bye, y'all.